What's up, y'all? We back again for another live stream. So before we get started, I'm just doing the same thing. I'm gonna post that I'm live real quick. Okay, I'm almost done. Live. Mm, All right, so the first thing we do, like we do every day, is we check the news on what red news is coming out. So we had some red news that came out at 8:30. It's 8:40 right now, so it's all good. We don't have any more red news. So before we get started, I'm gonna show y'all my accounts for transparency to show y'all like I didn't take no trades off stream. So I'm gonna go into my FXify account, my first account right here. So let me go to the dashboard. And as you can see, I'm in drawdown 3.35. So we just executing rules because that's what makes money overall. So we go to the next account right here. This is the other account right here. That's the drawdown right here, 4.8. We didn't take any trades. We only took one trade this month. And yeah, so what I'm gonna do is I'm gonna start analyzing the chart. The first thing you do is just you show up, you analyze, you see if there's a good market where you could put risk behind. That's all it is. If there's not, you don't trade and you wait because you don't need to trade every day. So let me see what we have going on. I'm gonna analyze USD JPY first. So what we have here on the daily time frame, we're clearly bearish, moving downwards, right? On my context time frame, see what we have going on. So we had the context break. So this is the same thing. The context flush right here. First context break of structure one. Then if we can go into validation, which is the 30-minute, because we're gonna be trading in 5 minutes for these funded accounts. What do we see here? So we had the flush right here, we had the validation break one, validation break of two, then we reflushed right here. So you notice how I was expecting to move down from this area yesterday, but you notice how even though I was wrong about it right here, I didn't take any trades in it, which means I didn't lose any money. So this is where I can call like the flush because we moved under all the MAs. We're still moving downwards overall, and so far, so far, we haven't created like a first fractal breaker structure one. So I feel like this market could really, really look good. So what I can expect is price can do something like this where it's pausing against the 10 or 20. I can go on a lower time frame to look for confirmations. Let me see how gold is looking. Gold was looking really, 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 really good yesterday. I was expecting buys in this area. Didn't get any trades, only for my own for a challenge which I took off. But the challenges I don't really count those. Those were on a different time frame. So if I look at gold right here, let me see what's going on. Yeah, this is what I was talking about yesterday. I was like, from this area, I was like, okay, the likely move we're gonna have it is to target that on the highs right here because gold is overall bullish. So you want to follow the trend with on gold, right? So that's what our context time frame is telling. So you notice how before I jump on this 5 minute, I just need multi time frame analysis. I need alignment before deciding to jump into a market. So we have the same action going on. So let's actually see if we can label this right here. This is a potential good market right here. I can set up in the next 30 minutes or hour, depending on how it looks. So let me see what's going on here. So we had a validation flush right here, and let's see what happened right here. So we had a nice move upwards that paused on the 10, that black line. So that's the validation breaker structure one, right? You can consider this whole thing validation breaker structure two, just because the way how, even though this one is right here, this one like printed right next to it, so you can consider this two or three or the whole thing two. You could say this one is validation breaker structure three, and validation breaker structure four, right here. That's how I would label it. So basically, if depending on, let me see how the lower time frame looks. Yeah, this is actually an area that. So let me see. We move down, started looking ugly. All right, so this is like an area where I wouldn't even get involved at all. So the thing is, we're getting a bit like extended in the cycle. Not extended for a bullish move, but for the cycle to reset to continue bullish overall. And what do I mean by that? Price after the flush usually creates 4 to 5 breaks of structure. So we have the fourth one. So potentially price could maybe either push up and then end up failing if reflushing, or it can like push up, push up one more time after that, and then reflush. So that's the thing. And during this area, like it's all the way up here, and even if it reflushed back into the same area, I don't like how this area, it's a long range and we're consolidating like this. It doesn't look clean to me. It's a it's a long range. It's consolidating. Yeah, just don't like how long this range is. So I'm gonna ignore this price action from gold because it's not worth putting risk on. That's my thought process. So I'm gonna check out some other markets and see what is the story, what are we doing, and is there a way I could put risk behind it? So the daily for Euro USD bullish Look at this 5 hour. So right here, if you remember the beginning of the week, I was like, this area wouldn't be a good area to be trading as of right now for lower time frames because it's just chopping around. I need proof. Then yesterday we had a move above like this, and I was expecting this to be the first fractal breaker structure to pause right on the 10 or 20 before continuing upwards. But then we just reflushed. But then what do we have here on the context time frame? We have the context time frame accumulating right here. Like it's just the first move that creates that move outwards to start the cycle after flushing. And, like example, like this is the like after the flush, the first move out of it that starts the fractal breaks of structure. So that's what's going on. Like right here, the first move out of it that start that potentially starts the fractal break of structure. I don't see any right here, but it's starting the momentum though. Where we at? Um, so that means it's good to look at our lower time frames to see what we is potentially going on here. So we had, let's see. Hmm. So what I could potentially see right here is we have huge momentum coming into the market right here, right? We are in a large range, but what I can expect is if price can pause on the 10 or 20, it will be worth it to go on a lower time frame to look for confirmations for that breakout of this large range. Because if price is gonna break out nicely out of the range, it's gonna pause nicely in a like relative straight line down against the 50 and create the setup where I can buy stop and manage accordingly. So Euro USD actually looks really, really, really good for opportunities. If price can just pause against this, I'm definitely look to take risk if I could look for confirmations there. So I'm gonna put this in green here. What did we say? Gold. Gold. I'm gonna put this. I'm gonna put this in blue right now because I'm not gonna be trading gold. Are you trading a funded account? Yeah, I am. Um, yeah, they're just funded accounts. I showed the login and everything all in the beginning to show transparency. So they are funded accounts. Um, I also show the account numbers and everything, so um, y'all know that every stream that I'm coming in is the same account, and I show the the balances for transparency. So gold, I'm not interested in right now because so the first two ones I'm looking at is Euro USD and potentially USD JPY. Let's analyze Bitcoin as well. If I go on the daily, let's see what we're doing. Honestly, I don't like this price action. Um, as of yet, the 5 minutes, yeah, probably chopping around. So these are the areas that I would ignore. If you don't know when to stay out of price, you're gonna be taking everything and anything, and it's gonna just lead to random results. So I'm not interested in Bitcoin. I'm gonna leave that in red. I'm going to higher time frame. So we had a stage one price moving sideways. It came out of this area. Probably I wouldn't, me personally, I wouldn't look at this only because there's better markets. Like when there's better looking markets, like say example, like Euro USD, you want to trade the best looking market that goes with it on the strategy. So basically Euro USD is still very very good. USD JPY. So what I'm basically doing is I'm gathering a list of potential markets that is moving in line with what I like to see. That moves in line with my entry criteria. And if one market ends up failing, because you can have analysis and be wrong about the market, but it doesn't mean you take a trade. But if one fails, I can look at another one, see if it looks clean. And if all of them fail, I just walk away for the day. So I'm gonna analyze a few stocks on here because I know all the stocks were down. So let's see what we're doing. Like something like Meta, like I can immediately tell that we have disalignment on the lower time frames. Like we're bearish right on short term right now, but since I want 5 minute entries, I already know the 5 minutes gonna be like bullish. So we have disalignment. So that's a market that I would completely ignore. So since all the stocks move similarly, I can bet like all the other stocks are probably doing the same thing where we have disalignment because they move similar. So I'm gonna stick to on Euro USD as my main one I want to look for. So simply what if we can get that pause against that 10 and 20, what I'm gonna be looking for is just a simple like it's just a simple entry. We flush down close to the 50, we push up, we make a pause. Like it's just a structural like structure, a mini pause, fractal pause, which is a candle printing before taking out the previous candle's high. Now I just buy stop the high, and I'm basically buy stopping fractal structure. You can call it demand, whatever you want to call it. It's all the same thing. That's simply my entry criteria, and I'm just gonna manage accordingly. But depending on how this looks, it, plays a factor as well. So if this it has to pause on the 10 and 20 because it shows me it's supporting the orders higher basically. So yeah, I'm just gonna wait for that as well. So I know by the time it comes to the 50 on the 5 minute, it is gonna be pausing against the 10 on the 30, which is something I want to see to potentially get it to break out of this range. But if it's gonna chop around in this huge range, what's most likely gonna happen is price is gonna fail, not give me an entry, probably chop around somewhere right here, fail, and then at that point I would probably wait for a whole breakout of this range because the market condition would change. So it's basically just understanding what price is likely to do. And it doesn't mean the market doesn't have to do what you're expecting as well. It doesn't have to do any of that at all. Because if you ever tested your system at all, you would notice that you're gonna be taking losses. You're gonna be taking on wins as well. You're gonna be taking break evens, but it's about the execution. Because if you ever show up to my live streams, the only thing you see me do is my only job is to show up and analyze. That's it. And if there's something that's worth taking risk, I take the risk. That's it. That it's nothing more, nothing less to it. Because a lot of traders are so focused on the short term, and is I I don't blame them because it's mainly because how social media does it. Everybody's just showing wins when most of the actual professionals out there are focusing on trade, um, the process of just executing the trades because that's what makes the money overall. And by doing that, by focusing on the process like that, you naturally are gonna gain more capital when you focus on the process. So that's naturally gonna make you more money over time. Because you got to think about this like a business. A business takes time to be built. So trading isn't this thing where you're trying to grow this $100 to $10,000. That's a crazy, insane growth, stuff like that. Instead, you know, find a way to get the capital, like find a way to focus on the process first. Because yes, we have these prop firms. Yes, we have companies that can give you investor capital with like Darwin X. Yes, we have that, but if you're not focusing on the process to get the skill set, then you're just going to be burning through money. Like how you see a lot of people just burning through challenges over and over, when instead you can find one strategy. I don't care what strategy you use, back test the strategy, and not only back test your strategy for a number of trade like 100 to 200 trades, actually demo test those on trades because you need to actually feel what it means to be patient. Because demo testing is really good, but when you're in the live markets, right, you're gonna have to actually feel what it means to be patient in the market. because when you're back testing, you're clicking through all these bars, you're moving fast, you're finding the setup, but you don't know how long you're waiting between setups. Like this month, I only took one trade, but if you don't understand that you have to wait a certain time, especially when you're on these higher time frames. If you're on like you're a swing trader, you might be waiting a day. I mean, like couple weeks for a setup. But if you're not ready for that and patient enough, you're gonna be making mistakes. And that's why do suggest you have to do like a demo testing phase right after the back test. And the demo test is only reliable when you're actually trading the system that you traded during back testing. Because now you're actually, okay, you're actually trading the system, but you're actually showing up consistently to look for a market and trade it based on what you would really do. So that would be way more beneficial, especially to your psychology when you actually feel like you're ready and confident to actually um put whatever money you want to risk in the market. Which is not me saying put whatever money you want to risk, but it's just a better process than just thinking you just need to throw money at the market and learn that way. It's gonna take you way longer, and most people quit before um even realizing what they really have to do. So like even though I'm expecting that, like there'll be times where I'm waiting for a setup and it just ends up failing, and then I have to walk away. That's why you like trading shouldn't be the only thing you're doing. You should be doing other things because it's gonna like when you wake up in the morning and you just wait and then there's nothing to do after because you didn't take a trade. It's gonna be feeling really, really, really boring. So that's what I really call experience. So experience in trading doesn't like to gain experience with the execution. It doesn't have to be with just you throw your money at the market and just see what happens. It could be like an actual like process. Because think about it, a business, they're gonna have a plan, a business plan, a business system on what how they're gonna do things. So you got to ask yourself, what am I gonna do to improve as well? Because if you can see in the tap on my top corner, I got my journal out right here. So I treat this as a business. Like I show up, I got my journal. So any mistakes I make, I can fix it in the future so I can become a better trader. Because that's what it's all about. A lot of traders just want to come up and just they want to make a crazy amount without starting with baby steps. Because if you look at my personal results, they're not like amazing. But in terms of like me making the payouts every year, um, that is a start because you got to remember that 95% of people lose money. So the fact that I'm actually making money and I could show that, that's still a stepping stone, but that doesn't mean I can't improve because there's still a lot more money to be made. There's still a lot more things to improve on. So how do I do that? Every time I take a trade, I screenshot it, put it in the journal, write down the thought process behind it, and after a week, I can review any trades I took for the week. After a month, I can review that. After a quarter or a year, I can review that, and I can compare my trades to my back testing to see was I consistent in my back testing? Because think about it. If you're back testing, you're maybe you're back testing for like yeah, a certain number of trades, 100, 200. Maybe you're back testing a few years. But like I said, you don't notice how fast back testing happens. So you're trading a strategy for a whole year, 2 years, 3 years for a number of trades, not changing anything up at all during back testing. But when you're in the live markets, if you're changing things up, you're actually changing the variable because you don't notice the time it took. So during that actual 1 year in the live markets, you're changing things up all the time. It's okay to make small tweaks like every quarter based on like your data. It's okay to do that because you're using data. Every business you gotta make business decisions based on data, basically. But when you're constantly changing things up, um, based on every single trade, you're basically gonna give yourself a little bit more random results. especially if you aren't following your rules. The worst thing you can do is make a decision based on one trade. Like if I ever want to make a decision, what I do is I look back at all my journal trades from this year, last year, and what I do, and then I also look at my back testing trades as well, and I find similarities between my winners and losers. So I compare a number of trades together, and it will help me come up with a conclusion to potentially improve my trading as well. And it's all about testing that as well too. So let me jump up to the higher time frame to see what we're doing a little bit. So nothing much because I wanted to come a bit closer to that 10 because what I'm trying to do is my edge doesn't come from winning a lot because I'm always transparent with that. I don't win a lot. I win around 30% to 40% on a good quarter. But my edge comes from basically break even quick and letting my winners just run. That's it. Because think about it, profitable trading is really just math. It's really just math. If you can find a way where your winners are way bigger than your losses, it's really powerful. Especially when this has to be said. It doesn't matter what trading system you have, but you need to be trading it in the right context. Cause yeah, you can have this this plan to have a system where you want your winners to run to make more money on your winners, but you have to be trading that system in a particular context. Because yeah, I have a setup where I'm basically buy stopping that fractal structure, but if I'm taking that anywhere and everywhere, of course I'm gonna be taking random trades in random areas, which will give random results because there's no context behind it. So that's why you can see that I before I even jump on this 5 minute, I have a whole bunch of confluences because I just show it to the market. What do I have? Like I call this the basically a bullish cycle. So on the daily, we just have bullish breaks of structure. So I consider two breaks of structure on the higher time frame like a bullish market, and then also a bullish cycle. So a move under all the MAs, I call that like a huge flush. You can call it whatever you want. Like you can call it a huge move down, whatever you want to call it, but it's all about what price is doing. Now after that, what I expect is for price to pause against the 10 and 20, and then push higher and create these breaks of structure basically 4 to 5. So they basically happen on all time frames. So if I go on this is my that was to establish the overall direction. Then I go on the 5 hour and I basically see the same thing. You flush under it, right? And then right here I would consider another flush because we moved under the MAs. Considerably like it depends on how it looks as well. So we flush and potentially we making that fractal this break of structure higher to continue a trend. Then we have the same thing happening on this 30 minute. But it all depends on what price does as well in the next couple of hours as well. Because right now it looks clean. We flushed under the MAs. Now we're pausing against the 10. We push higher, pause against the 10, and that's where I look for confirmations. So a lot of traders may think like I don't use like crossovers or anything like that. I don't just trade with an indicator. I use it to as a tool with price action and a story. I don't just enter because price came to a 10. I don't do any of that. I look at what price is doing and then make a decision. So any strategy you trade, there has to be like a filtering process to basically help you take less trades because less trades is actually better because you're actually refining your best setups, which doesn't necessarily mean you're gonna win more, but it means that you're setting yourself up to to make money long term, basically. because the same type of setups I take that set up to actually move with the trend and may become a potential runner, like a huge win, are the same trades that may become a break even or a loss. There's there's nothing different to that unless I make a mistake or unless I change something. So that's why I feel like a lot of traders are, if they're focused trade by trade, it's really a disadvantage because each trade, it's not guaranteed that what you expect will play out. In simple terms, like a good example is this right here. Even though I'm waiting for it to come just a bit closer, I like when it comes just a bit closer, either closer to it or under it, and then starts creating the setup where it's pausing nicely as it's pushing up. Even though I'm expecting that, that doesn't mean that price can't just push all the way higher and then run to the moon or whatever. It doesn't mean that can't happen, but at the same time, I gotta realize there's tons of markets I can trade as long as there's a good context with it. Because I'm willing to look at a lot of markets, but it doesn't mean that I'm trading everything and anything because I'm looking for context, not the actual setup. Like think about it. Um, if you ever traded patterns before, like just patterns, you may have like been like, "Damn, these patterns suck. Oh man, these patterns don't work." But if I really think about it, now that I'm thinking about it, patterns actually do work in the correct context of what the market is doing. Because all a pattern is just price action. It's price action doing a certain thing. Because it's like if you look at a pattern correctly, you will see there's certain type, there's structure happening. There's a certain thing, so there's context that you need to use. Even though I don't trade patterns or anything, so you just get better and better over time. That's that's all it is about. Just getting better and better over time. You know, nothing is overnight. Nothing is overnight. Like Euro USD, the best. Yeah, like Euro USD, the best. I just realized I would have to wait before even looking for a setup because the pause has to happen. So we have this high created right here. So what I will need for price to do is close without taking out this candle's high in the next 17 minutes. And yeah, I want it to be like close to that 50, like I said, before making a decision. Um, Same thing with this as well. You know, I honestly, yeah, I wouldn't trade USD JPY. I didn't check the lower time frame on how it looks. Wait, yeah, I don't like these long ranges. Even though it is practically moving nice in a straight line instead of consolidation. Uh, Honestly, I'm not gonna. I'm gonna, even though it looks nice, I'm not gonna look at it, even only because what I was testing, like with the long ranges, I always skip them, and I saw like a better improvement. And when I looked at my winners, most of them, the best ones weren't in these long ranges. So what I'm gonna do is skip out of this. And if I want to ever trade this in the future, I'm just gonna have a separate test where I'm just gonna be just trading the long ranges as long as it's looking clean, like something similar to this. So if this happens in the future and this it ends up really being a good range for the long term, I can add it. But for now, I'm just gonna skip out of it because it's not something I'm used to seeing. Even though the ranges are actually nice, I'm gonna just put this in blue because unless we break out of it and create a new range, yeah, yeah. Then yeah, I said I wasn't following gold, so we just gotta wait for 15 minutes for this candle to close because we need that pause. Pause to happen. It's all a waiting game.